Hello all and welcome to the third installment of Bona's Business Weekly. I'm your host, Tanner Jubenville. Video gaming giant Nintendo saw its shares soar as much as 29% after the company announced it would start making games for cell phones and other mobile devices. They've recently partnered up with DNA, a Japanese company specializing in mobile gaming. And then the company also hinted Tuesday about a possible new gaming console codenamed NX. More trouble for lumber liquidators following the recent negative publicity in which the company was accused of selling tainted Chinese wood products. Now the stock for the company fell another 5.4% after allegations of insider trading also became public. The investor is suing the company after the founder as well as the CEO are both accused of selling $19 million worth of stock at inflated prices before the selling of the tainted wood became known. The economic outlook has seemed a bit grim lately in Europe, but not in Germany. The German equivalent of the Dow Jones Industrial Average, called the DAX, has climbed 40% in just 5 months as unemployment is falling and retail sales across the continent are moving faster. In fact, they are rising at the fastest pace in 10 years. The depreciating value of the euro has also been a factor for Germany's economic rise in the recent months. Even with falling oil prices, natural gas production in the U.S. is still drilling forward, but not for as long as many may think. Natural gas production may decline next year mainly because of low oil prices. Forecasters believe natural gas production to keep rising every year, just at a slower pace than before. At its current rate, the natural gas production in the U.S. has the nation becoming a net exporter of gas by 2020. As recent as October of last year, no one thought gas production would possibly decline as soon as it looks to be. But now even Merrill Lynch is set for production falling by next year. Rumors of another government bailout are flying around Wall Street, but this time it would be for the companies who keep our cars going. Oil prices have dropped almost 60% since June, and smaller oil companies are going bankrupt, and even the big guys are feeling the pain as well. Some tend to believe that the lower oil prices help the economy because it creates more spending power for consumers. Those people aren't wrong, but the economy would actually be better off with those prices increasing. Now to discuss this with me is Sim Energy Hedge Fund co-manager Steve Aprilano. Steve, nice to have you today.
Thank you very much.
So, people assume that low gas prices help the economy, but in this case, at least, that's not necessarily true. Can you explain why?
Yeah, so the popular assumption is that low oil prices are going to put more money in the pocket of the U.S. consumer, but really what that's doing is, in aggregate for the U.S. economy, it's taking a lot of those smaller oil producers out of business, and that's hurting jobs for people in these kind of less than fortunate economic areas in North Dakota and Texas, and it's really affecting the U.S. economy more than helping the individual U.S. consumer.
So projections, even as far back as just 6 months ago, had natural gas production in the U.S. climbing at a pretty fast rate, and now they're still projected to climb, but definitely not the rate they were before. So how are these low oil prices hurting that production?
So these low oil prices are hurting the natural gas production because companies are taking their rigs offline, and as rigs are taken offline, it hurts the incidental natural gas production as well. Essentially what's happening is as these companies go in and get the oil, they get an amount of natural gas as well, and with the less rigs there are, the less natural gas will be produced.
So why is OPEC continuing to pump near record amounts a day?
So OPEC is continuing to pump record amounts a day out of their wells, because they have very low break-even points, around the ranges of $10 to $20 per barrel, and they can afford these low oil prices. In doing so, they'll price out the U.S. producer, who has a lot higher of a break-even point, and make us more dependent on foreign imports.
So what do you predict will happen in the coming months, and could you see a potential government bailout coming for oil companies?
As far as the coming months, I don't think we'll see a government bailout. I don't think it's to the extent of the financial crisis in 2008, but I do think we're seeing kind of a mini crisis in these low energy prices. I think we're going to have a lot more consolidation within the energy industry. And as far as a price prediction or anything like that, I try to stray away from that because I've been wrong since we've been at $80 a barrel, $70 a barrel, $60 a barrel. But if I had to put a number on it, I would say within the coming months will be around the $50 to $60 range, just because of the rigs coming offline and the production numbers starting to even out quite a bit.
Steve, that's all the questions I have for you. Thanks for coming in.
Thank you for having me.